It's Saturday morning, October the 22nd, 2022, and it's time for the weekend webinar. We have a very important week behind us and ahead of us. It appears Friday wasn't particularly strong, but the week before, that reversal bar on the S&P 500 was huge right there as the market came down in a 1, 2, 3, 4, 5 wave decline. Reversed off 34.91, just under 3,500, and bounced to 37.62, about 270 points, and then backed off. Again, on Friday, a big engulfing reversal bar, which saw the indices go from 36.47 to 37.57, 110 points on the S&P 500, and closing near the upper end of the range. So what's important to look forward to going forward? Well, the declining tops line and lateral price resistance, both juxtaposition intersect at about 38.067 right there. We get through that, we probably have 38.85 to 3900 as your next target. If we should get through that, then you have a big potential rally in your hands. Keep an eye though on Friday's low, because I think anything under 36.45, 47 could lead to a much deeper retest, but it's very promising. Now let's take a look at the NASDAQ 100. The NDX not as strong, but you can see the big engulfing reversal bar, the pullback test, and then pop. And right now it looks like the key resistance on the NASDAQ 100 would be somewhere around 11.650.60, and then 11.950.60. So got a 300-point rally on our hands from that point, but possibly as much as 600 points from here before you run into some overhead resistance, at least some big ones. That means we need to first take out 11.660 before we get to 11.950.60. So that's what it looks like. This looks like a V bottom with a platform. So does the S&P 500. It also looks like the potential of the left shoulder head and maybe a right shoulder forming for either a right-handed extended V or an inverse head and shoulders. Not so much on the S&P unless we get up to there and back off, but stay tuned. What about the small cap index? It looks totally different. You can see we had a double top, and that's the key resistance now. Tuesday's high, 177.29 is going to be the key. We get to that, we're looking at 181 and 185.6 range. And then Friday's low at 168, kind of really important for me. I don't want to see that, or we're going to be bound at 162.3 again. What about transportations? Well, also different. We've had a 1, 2, 3 wave and a pullback, and I'm not sure whether we're able to call that a rising channel or not. For now, it looks like they broke out and they pull back to retest. Hard call. I don't like the way the transportation and small caps are acting, but I do like the larger cap indices for the S&P and NASDAQ as of this point. Something we haven't looked at in a while, but take a look at utilities. Interesting that a V bottom with a reversal and then a right-handed extended V may be forming. I'm not sure how meaningful that is or what it means, but if the UTIL gets above 885, you may see that get into the 925.35 zone up there, but it's all conjecture. Well, let's go to the underlying technicals. The McClellan oscillator bounced nicely with the indices. Now, what's interesting is it's made a higher high, while the market didn't, and it's made lower lows, there, indicating to me a good underlying trend is in play, but we're at plus 84 and getting towards an overbought condition, which gets you up at about 180 to 200, but we're not there yet, and we could have a couple more days up before we back and fill. And here's the bottom line on this index. I've always told you this. When the market thrusts off an intermediate low, this usually happens. As the indices rally with narrower technicals, because this is based on advanced declines and up-down volume. And when that happens, you get more of this kind of a consolidation, this kind of a consolidation, this kind of a consolidation for as much as a week or 2 or 3. So they could stay up there and be overbought for a while before the market does pull back down. But that means that at that point, the indices can continue to move higher as technicals fade a little bit, because it's more difficult to get your 5 and 10 at 15 and 1 type up-down volume and advanced decline days than it would be at the beginning of a rally when the market thrusts higher. Look at the percentage of stocks above their 40, and that's really rapidly increased from a single-digit number near 8 all the way up to 40. It's a big move. So 40% of stocks now above their 40, and that's a big improvement. It's not really overbought until it gets like 80, so you have a lot of room to run up into that 70, 80 range. And the VIX, well, it's never really done that much. But matter of fact, within the last month, I've told you a couple of times, we've reached the mid 30s, which has been real resistance on this indicator. And then that's where, at this point, the market appears to be oversold. That's a fear index. When it gets down to that level, we're talking about apathy, and the market's probably overbought and dangerous. But we're not anywhere near that, of course. So let's see where we go from there. Now look at the components. Are they reversing? Well, look at the Apple chart. A big engulfing reversal day 2 weeks ago, then a pullback, and then a follow through, got right to resistance, backed up a little bit, a couple inside days, and then Friday was big. Apple jumped from 142.5 to 147.75 or better, closed at the upper end of the range. Now your resistance and target is about 153 at the declining 50-day moving average, and then possibly 158. Those would be Apple targets if we do get a rally. And this extends. Monday's an important day, in my opinion. Amazon also exhibiting bottoming type action, at least from the standpoint of a poke down into support there. Take a look at that area. That's where it bottomed and then bounced. We have a little bit of a V bottom with the platform. The key for Amazon. If you see Amazon over 119.5, we could probably get it up into mid 120s. That would be beneficial, to say the least, of the market. We have had a 1, 2, 3, 4, 5 wave decline followed by a reversal, but the volume is not impressive. On Apple, it's also a 1, 2, 3, 4, 5 wave decline and a retest, reversal, etc. This looks better. Google doesn't look as good, but at the same time, Google also has a kind of a bottoming type pattern after breaking through the declining top line and retesting it, reversed on Friday. So Google would do well for the market by getting it back over 104, 4.25. Microsoft also a V bottom with a right-hand extended platform. There is support right about 232.75, and your resistance about 244. You get through that, you might see Microsoft spike into that 265, 68 range. Netflix is a monster, really leading the market higher. Take a look at this. Believe it or not, in a week and a half, Netflix has gone from 212 to 290. 78 points. That's pushing 35, 40% in just a couple of weeks for Netflix. Powerful move with a breakaway gap out above that 3-month base or trading range. It does appear to be a 1, 2, and 3 now. Whether this extends or not, the next extension and gap fill gets you to 330, folks. 330. That's another 40 points or thereabout. Netflix looks best of any of them. What looks worse? That's Facebook Meta. Terrible chart. I think Wall Street's starting to really hate this company. But a move above 138 may change things. Confirmation will be over 142. So 138, 142 resistance for Meta, that needs to show me something. NVIDIA, it bounced, but again, this one, surprisingly for me, I guess because of the semiconductor industry problems, is just not doing anything more than that, and that could be a bear flag. Although 5 days in a row up with good volume, decent volume tells me we may try to break out. The keys are going to be for this one right now about 134 and then a gap of 144.5. Once you get above that zone, you're in business, but this is a little suspect right now. So is Tesla. You can see Tesla tried to bounce, it got hammered on Thursday. Had an inside day Friday up about 7 points or 3.5%. But until I see Tesla spike up through 230, I'm not going to be bullish on this stock. It's in a distinct negative downtrend. So between Tesla and Meta, they put pressure on the markets, on the NASDAQ 100 generals anyway. The rest of the group looks pretty strong again, as I said, looking at Netflix, Microsoft, Google, Apple, Amazon, etc. So we'll move on from those right now. The ETFs, well, look at the semiconductors, and especially banks, but I'm going to start with semiconductors. This looks like a V bottom and a pullback, and then 5 days in a row up. Friday's day was particularly impressive as it closed at the highest level in about 3 weeks or 2 weeks, and right at resistance. So we follow through here. We can take this declining top line out. I think you got a shot at getting up to 200, 204 zone. That would be big resistance but it would be an indicator that the market is moving higher. Financials and banks, etc. Big explosive reversal day 2 weeks ago that saw it go from literally 49.5 to 60.5, 12 points, or 11 points in one day on that index, followed by a follow through and a pullback after it got up to what looks like declining tops line, and then right back up again and rallying to resistance. This is the key number for this index. If the FAS, and this looks like a left shoulder head, maybe a right shoulder. But if the FAS can get up above 67, I'm looking at 72, 74 zone where the declining top line, the lateral price resistance intersect right there. It's important though that the 56.5 7 zone is not violated. That would be very negative. It does look like an inverse head and shoulders, doesn't it? Let's look at an hourly chart. The left shoulder head, right shoulder complex, and there's your neckline. The biotechs, well, XBI was very disappointed with the failure there of a multiple tops. And now you got to draw your line back up to that zone. So let's just say this, massive resistance 83 range on the XBI, but the darn thing came all the way down to test support around at 76. Now it bounced pretty much all week, particularly Friday when I had an engulfing bullish bar, but I need the XBI Monday, Tuesday to get up through here. Let's call it 79. Yep, above 79, you might see a stock go into the 80.5, 81.5, even as high as 83 range. There's some big resistance up there. But let's look at the, that is an hourly chart. Sorry, folks, here's your daily. Looks a lot different, but you can see it's holding support and reversing. The LABU, same thing. Really held support at 596 on Friday, 597, and closed at 662, up 8%. Nice pop. The volume picked up too. This on the hourly chart looks like that. And this has work to do as well. Certainly that's your new declining top line. And until I see this base taken out of several weeks, once you get LABU over 8, 10, 11 in that area, you may see 10, 12, 13, something like that. It could be a big bull phase or bull rally going on after we've seen some dire times in Wall Street. So that covers basically the three indices, or the three ETFs I follow for the semiconductors, SMH, and the financials, FAS, biotechs, of course, XBI and LABU. What does gold look like? Well, that's a surprise to me, finally. We're starting to see some energy. This is an inverse head and shoulders on the GDX. And we're at the declining top line and some lateral price resistance. If we get follow through on gold next week, and the GDX, then your target is 26 and 27.5 on the GDX. What about Nugget and JNUG? We can see similar patterns. They're not as strong, but I would say that if it does pop through 26, we may see 29, 30 range, and that would be very beneficial. This is, again, an hourly chart, so you can scroll in, look at it a little closer. It's Nugget and JNUG, they both look alike. Indeed. Silver, AGQ also popped. Here's your daily. Back up to what I consider a mid-range resistance line. Your next target would be somewhere between 22.5 to 23, and then we're looking at 25.5. But again, it's a big basing formation, but it can go lower from here if they fail, so be very careful. We've seen a lot of fits and starts. Here it looked like a start, here it looked like a start, and there certainly looked like one, but failed that resistance. We'll see what happens with gold and silver right now. I'm just okay with it. What about oil? Well, when I looked at this large pattern over the last few months, I said left shoulder head and maybe a right shoulder, and it sure enough broke down. No follow through. It bounced back to resistance and backed off. Right now, this could be an inverse head and shoulders, but the neckline and certainly the downtrend line, about 75 needs to be taken out. Then you're looking at 79, 80 or better, and then you're off to the races. With a stop under 68 for sure, because this still might be a downtrend. As you can see, we haven't broken out yet. Gush, a little different, a lot different. This is a V bottom with a rising pattern, and it looks like if it breaks out over the highs from a week and a half ago, 2 weeks ago. Over 180, I think gets you 195.97. I would stop under 165. That's key support for me right now. That's also trend line support. So if it does explode, we can see oil make a much bigger move, and it might surprise some people. You know, I was more negative on it, but after looking at all the oil stocks that are hanging in there, I think it might be a safe haven for some people, because certainly these majority of oil stocks that I follow are looking better, and we'll go over some of them a little later. Nat gas will boil. This is something I want to point out. We had a comment from our esteemed colleague Gilles, who said he was buying some calls on this, and I can see why. If you take a look at the 1, 2, 3, 4, this is a 1, 2, 3, 4, 5-wave decline, followed by a selling climax and an exhaustion gap on big volume. So yeah, I think Boyle may have hit a temporary bottom, and it could be an excellent trade, even a call trade if you go out a few weeks. I would look for a snapback to test 44.5, something of that nature. That's a big move, at the very least 38.9. So watch for that. We'll see what happens with that. On the other side, KOLD had such a run that it actually exhausted here with a pop through the top of the channel. There's some lateral resistance up there. So we may get a pullback with the Boyle going the other way, but all conjecture. I don't want to anticipate anything until the market tells me what to do. As you can see, this is surging right now. And that's it for the ETFs that I follow closely. And let's move on. We got a bunch of stocks to talk about and some shorts, although the short list is very, very small at this point. Alcoa had a big couple of days, Thursday and Friday, and you can see it's at resistance here. But peeking its head out, that may at least test the climbing top line at 45. Keep an eye on that one. AEHR broke out on Friday, had an engulfing reversal bar. I love this one. This is a tech traded swing. I think it goes to mid-20s, at least to the mid-channel line, somewhere around 24.5. AMLX is one of the biotechs that I follow, and it is really looking good. The volume and technicals aren't great, but the price pattern says this may be low 40s before not too long. Empiris had a big day on Friday. Last week was a big day, big week for it, and it traded a big spike on Wednesday, pulled back to test Thursday, and then exploded again Friday. I don't know where the stock can go, but I can say right now it's in play, and it may be a $15 stock before not too long. APA in the oil sector, one of my favorite long-term price. Look at that move. We were all over this in the high single digits. It's now in the 40s. Now, after reaching as high as 52-ish, it came down into the 30 range and bounced. It's got a nice base, a little platform, bit of a maybe wedge here, and it looks like it wants to break out. Your target is 47 and 52. B, explosive move in September, early October that saw this stock go from literally 1 to nearly 7, and then it's pulled back in a falling wedge. Is it dangerous? Of course. But is it at a falling wedge? Is this a possible opportunity? Keep an eye on the falling wedge, because you know falling wedges, when they break out, can spike. But be careful, because Friday's low for me under 3.5, and that's only 10 cents from here. May be dangerous. Biohaven as a spinoff, you can see that this is the spinoff. It popped, pulled back, and it's popping a big volume again. Friday it broke out slightly and pulled back, but something to watch. There's a lot of room to run. BJRI, the restaurant chain, may be coming out of a bottoming pattern. I wanted to show you how it poked its head out and backed off, but intriguing pattern. I think it's turning bullish, like many other stocks that you'll see today. BLUE has been a tech trader swing since it broke out here and popped again and broke out here. Now it's pulling back one more time to test the trend line. Low volume ebb and a pullback tells me it's bullish. Boyle, we showed you that. BRLT, interesting chart in the consumer cyclical area. Big spike up and then a run up. And it's actually at the highest level we've seen. There is some resistance up here, but it's the highest level we've seen since April. If it extends here, you're looking at a possibility of a stock in the $11 range. CALX, after a long downtrend falling wedge, it broke out in July, ran up, and then it's been consolidating in a slightly rising channel. My target now is 67.8. CECE, Pollution Environmental Services, broke out here, broke out there, has a 1, 2, 3. This is 4. Wait for was a wedge. Wait for is breaking out. My targets are 12 and 15. CELC, really nice developing bottoming pattern in this diagnostics and research company, which dropped from low 30s down to under 5. V-bottomed, platformed, and moved up, and now it's flagging right here. Watch this one. If you see CELC take a pop through 1120, you might see a stock in the 13-14 range or more. Clearfield was one of our best swings this year. It popped. We put a swing out around 70. Within 6 weeks, it was 130, 60 points. It pulled back in a 3-wave corrective falling wedge to this prior high, held it, retested it. Now it's moved up again. Take a look. If this gets to 108, you're looking at 130 again, maybe 150. COMM breaks out here, pulls back and retests it, pops, and then forms a wedge and breaks out. You see the double, triple top here. Keep an eye on this one over 1290 because then you're looking at 15, 18. Coupang was the tech trader swing here when it broke out. It pulled back and stair-stepped in a 1, 2, 3, 4, 5-wave, moved right to my target, reversed, falling wedge, and popped out the double top, only to pull back. I wanted to show you that Friday it took a dip under support, closed right at it. Dangerous. CPRX is one of those biotechs that have been strong pretty much since June. It's gone from 6 and spiked up in September to 17, so almost tripled, then pulled back and now it's consolidating. If it breaks out with any energy over 13.5, keep an eye. Target 16, 18. Dawn, another biotech with a major breakaway gap in June, a run up to resistance and a pullback on low volume, and then a spike up to my target near 29, only to pull back. It's a little dangerous in here. You don't want it below this line. Stop would be under 17 for me. What I need to see is a run over 21 at 60, and then you're targeting high 20s. DCGO, 1, 2, 3, 4, fifth wave, maybe a 1, 2. I think 3, 4, and 5 maybe had. Keep an eye on that. That's my estimation, targeting 13. DGII, beautiful chart. Break through a triple top, little flag, and explode. Then take a 3-month consolidation range here. Make nominal new highs here, here, and there, only to pull back each time. However, the pullbacks have held support. Recently, we're running back up again. Very nice relative strength in this market, folks. Nearly an all-time high. So if it does run, mid-channel target is 42, upper channel target 50. EGY, I want Bob to pay attention to this one. This one really had a nice run, of course, from about the low in August, about 2, all the way up to 9-ish, 866. Then it broke down here, retested, and had a 1, 2, 3, 4, 5-wave falling wedge. Broke out, and now it's wedging again. It might be a 1, 2. If we get a breakout, I'm looking for 3, 4, 5, back up to 8, 9 range. This is just completed a merger. ELF, fantastic relative strength. Inverse head and shoulders or right-handed extended V, breakout there. Target, and the next target is 48.50. Fantastic relative strength. EPOW. Things have changed for this company from what I understand fundamentally, but new battery technology, the stock exploded from 2 to 6.5 in 1 day on 7 million back in August, pulled way back and then spiked again and then formed the coil. And on Friday, it popped that coil. Volume increased a little bit, not a lot, but if this stock should get to 365 early next week, 4.5, 5.5, and 6.5, all potential targets. And this is a personal position of mine. ESPR, a tech trader swing, I believe back in here, it ran up to the target and backed off, and now it's going again. But you see, it's got key resistance at 8, 40 range, targeting 9.5, 10, and 11 if it continues this beautiful rising channel. Good relative strength in this market. ETNB, another biotech running, broke out of the coil, formed a little wedge, exploded, and pulled back and tested the apex and the moving averages and trend line, and then ran up, and you can see it's flagged last week. It looks quite good. Target 10.75, 11. EXTR broke out in July and ran up sharply and then pulled back. Recently broke out of this, what I would call a wedge, if you draw it this way. Here's your trend line. And so with Friday's action up 62 cents or 4%, I'm now looking for a retest and take out of the high. That would be over 15.5, and then you're targeting nearly 17. Looks good. FCX, copper just took off recently. FCX is a copper producer. Friday was a big day for it, up 3 points or 10%, but resistance and key resistance at 33.90, 34 is what it is going to be needed to take out, but it's a promising base. FGEN, Fibrogen, another biotech with a strong move, went from under 8 to 14.5, pulled back in an orderly fashion August, September. And then from that low, around 1160, is spiked up 17.5 range near the top of the channel and resistance there. So careful, you might need to back and forth for a while, but eventually a $19, $20 target. Big move on Finger exploded from 78 cents all the way up to 980. I mean, this is a 10, 12 fold increase. It finally had a hit, but last week recovered beautifully. Now the volume is nowhere near that, so I'd be careful. Most people that got trapped up there are probably going to be exiting here, so it might need to back and forth for a while. I don't think it's going to blow through 965, but if it does, you're looking at something in the low teens potentially. Careful though, very careful. First Solar starting to fade after a beautiful move with a breakaway gap in July and a rising channel that saw it run from the low to mid 80s into the 146 range. It's come down quite a bit. It's at support. We don't want it below 115, 15.5. Secondary support is a little beneath that at about 111. So 115 and 111 is your support zone. It needs to get back above 127. Halliburton and Schlumberger, SLB, both look similar. They're both major oil service companies. Schlumberger in particular was the day trade on Friday. Look at this pattern. Powerful move right to resistance, but I think it follows through. I'm looking for 55.6 on Schlumberger, and Halliburton breaking out here might get up to, I'm going to say, let's look at 38.9. Hudson, well, it's been on my list all year, and you can see why. It just keeps going up. Here's a stock that was a quarter, I'm not kidding, in 2019. And I'm wrong, 30 cents. And from 30 cents, 11 bucks. Now it's pulled down, it's formed a wedge. I can't tell if it's a bear wedge or not, but the bottom line is stop under 660. If it does go back to 11. HLIT, I can't explain why this stock is moving up. This technology stock is completely counter trend and very bullish. It's gone from 8 and change to 15. It looks like it could be 17, 18 soon. Powerful pattern. Look at the long-term chart. Outstanding. Immunogen. Well, this was a tech trader swing back here that didn't work. It broke down and it went down with the biotech group, but it sure bottomed when it got down in the 3 range and doubled to 6 and change. It then pulled back to support right at that pullback low here, creating a new rising channel, then spiked up back up to test the highs. I think if it gets through here, you're looking at 7.75 and 9.5. IMRA, look at this biotech coming out of a coil with a breakaway explosive move and then a coil and then another breakaway explosive move and a follow through that reached all the way up to 438 from a move around a $1.10 just 6 weeks ago. So, it's up 300% in 6 weeks, but momentum is fantastic. And with this stock having been much higher, you might see something in the high single digits at some point. IMVT, also very similar, broke out with explosive move and now it's flagging. Friday it popped, the volume wasn't big enough for me, but I do like the chart pattern. And I think you're gonna test probably around 12, 13 zone. IMBX was a tech trader swing when it broke out here around the 11 range back in July, and it ran all the way up to my target and then some by doubling to 25.5, more than doubling. It had a 1, 2, 3 wave, 3, 4, 5 wave corrective Fibonacci retraced from about a 0.618 and then boom, flag. Beautiful chart. There is resistance at 35, but I think it goes through it into the low to mid 40s. ISEE breakout, explosive gap, breakaway gap, spike up, about a 0.375 retracement, and then a pop to the highs. This looks like it wants to go. It's just consolidating up here near resistance, targeting 25 and 28. ISCC doesn't get much stronger than this. It spikes from 5 3/4 to 9.15 in a week, and then consolidates for 6 weeks. Friday was a big engulfing reversal bar from 834 to 9. The key though is going to be, can this get through 923? If it does, 10, 11.5 are your targets. Juniper, I think, may have broken out on Friday. It's a left-handed extended V with a nice pop, 5.7 million shares, up 4%. Good reversal. Your targets at 30.5, 31.5, and then we're looking at the gap up here at 33. KLXC, a very unusual low price stock in the oil sector that's Beautiful inverse head and shoulder breakaway gap flag, up to resistance. Friday was a good day for it. Up another 6%. My targets are 15 and 18. KOLD we talked about earlier. LABU we did as well. LASE, well, here's a fairly new IPO that imploded and exploded. The explosion took it from a pullback low at a 182 and literally tripled to 5.25. Now the week-long falling wedge on low volume tells me this may snap back again. The target's at 4.25 and 5.25. Mara, well, as you can see, Bitcoin-related stocks imploded, had a rally back in July, August, like most of them did, and now it's doing this. I don't think it's a bad pattern. It looks like a platform. You cannot let it go below 8.25 or 9. Hold on a moment. 9.5, sorry. But if it breaks out of here, 14 and 18, 19 may be targets. The measure move is much more than that. MCRB, another really nice looking chart in the biotech sector in a beautiful rising channel, has been consolidating for 6-7 weeks. Needs to get up through 7.25.5, and then you're looking at 9-10 zone. MGNX, the long decline. So this dropped from the low 30s to 2. V bottom platform breakout and then pullback, retest, form a platform there, and then this coil broke out of that, and Friday was a big day for it, up 19.5% as volume picked up to 2 million and change. My targets are 5.25, and then to test this gap there at 6.5. Another beautiful biotech sector in the biotech sector, breakaway gap with big volume. Couldn't get through this level, formed a flag, and then backed off the test, but it held that gap, held the trend line. At least it appears it has. Something to watch for a pop out, take out of 8.25, and move to 10 or better. MVST, big explosive move Wednesday, only traded 50 million shares and then backed off a little, but Friday came on again. So now I'm looking for extension to 3.25.5. MYOV, how about this biotech? 1, 2, 3, 4, 5. It looks like a takeover, but I don't think it is. I may be wrong. I can check my news. I didn't do that. My apologies. But if that is a bull coil, and that is what is signaling higher levels, we could see 29.30. Nutanix was a tech traded swing when it popped and pulled back right in air. It moved up a little bit, didn't quite get to my target, and then backed off in a 3-wave corrected pullback. It held the trend line, mostly filled the gap, held the 50-period moving average, reversed and gapped. Now we got a little flag in here. It looks awfully good. My target is 29 and 33. OIIM, very unusual little semiconductor. 1, 2, 3 bottoms. A big breakaway explosive move, and now a little bull mini wedge or pennant. Keep an eye on this one. It's got a triple top now, 445. You get through that, we're looking at 5 and 6. PACB broke out on Friday. I love that action. Volume increased to 9.3 million. That's the biggest volume in 3 months. But it looks like it did it on a breakaway day. Now we have room to run. 8.5, 9.5, 11, all targets. Stay tuned. PAYO, Pioneer Global, breakaway gap, pullback falling wedge, held the trend line, broke out again. Spiked through the high and formed the flag. That looks really good. My target, 9, 10.5. Pinduoduo, looks like a 1, 2, 3, 4, 5, and now this orderly pullback. So I can't tell yet. But if it's a base, it's sure setting up nicely. It's an easy stop, however, under 52, 2.5. Targets, mid-60s, low to mid-70s. Peggy, monster explosive move from 76 cents to 7.5. That's a 10-fold increase. And then what I would consider a fairly muted pullback. Low volume as well. As soon as the volume picked up again, the stock picked up. Watch this one next week, because above 585, you might see 7.5 and 10 or 11. But got to be careful. Any stock that spikes up like that and pulls back is subject to profit taking by people who got trapped up there. So let's see if it can break out. Perion had a really good report. And this is one old favorite of mine. If you remember, we gave you this at 5.75 back in 2020, and it ran into the high 20s. It was a 4 or 5-fold increase. And now for a long time now, it's consolidating. But lately, it looks like it's about to explode again. Friday was another positive day for it. Let's see if it can move through here. My targets, 26.75 and 31. PLRX, another biotech with an explosive move in July and then a pullback wedge, subsequently forming a rising channel. I think it extends 27.5 3/4 is my target. Roblox is a tech trader swing. It broke out last week and it formed a little flag in here. I like the look of it. If it manages to hold this area and take out that high, last week's high, 44.30, targets 47.5 and 53.5. Unusually strong chart from Richardson Electronics, which in the last 3 years have gone from 3 to 22.5. Big move in the last 2-3 weeks, 14 to 22.5. Channel top angle, it says 26.7 target. Rhythm, one of our better swings this year. It broke out that day. I gave you a tech trader swing on it in the 5-6 range. It subsequently, within 2 months, was up to 31, and now it's consolidating, coiling in this sector with a nice, what looks like a bull coil, but it could be a left shoulder head, right shoulder. So you got to put a stop under the neckline at 20. Sava, 1, 2, 3, 4. I believe a fifth wave may be coming. If the stock does move, I would be interested in the stock near the high 40s. Before that, we got to get to 39. SPTX, Silverback, another biotech stock, having moved from under 3 to over 6, more than doubling. It's a nice, steady, slow rising channel with a target of 7. Seed, as you know, a personal holding of mine that I really like. I like the story. I like the technicals. This is near an explosive stage. Should it get through this level above 12.25 or half, I think it goes vertical. 14, 17, 18 are my near-term targets. SGML, the strongest stock for me in the lithium group, by far, making new highs and could accelerate here. SOBR, many of us were trading this the last couple of weeks, big spike there and another run there. It's been basically down, up, down, up, down, and back up, and then reversal again on Friday. So Triple Top says we get to 385, we're looking at a $5.5, $6 stock. Stay tuned and stop under 2.5, very volatile. SRTS, another tech trader and personal holding, coming out of a falling wedge on Friday with the biggest volume in 6-7 weeks, up about 7%. If the stock gets through the high on Friday of 1360, I'm looking for 15.25, 18, and then 21. Great looking long-term chart. TERN, another biotech that exploded and flagged and popped, that's been trending. If it should follow this trend and continue to do so, eventually the target could be $10. But it's got to get to 7, 7.25 first. TH, exploded, flagged, exploded, coiled. It's a 1, 2, 3, 4. If it comes out of here, we got a $18, $19 stock, and then maybe even mid to high 20s. Watch this one. TMDX, V-bottom in February and been up ever since, having gone from 10 to 55. Now the pullback tells me it either consolidates in that zone and runs up again, in which case we'll retest 56.7, but the long term might be 70, 75. If it doesn't break down, your stop's under 39. TOST, software stock that popped here, pulled back and then popped again. It was a tech trader swing. It pulled back here a little bit too much, but I think the pattern would have to be called a falling wedge, and it broke out. Engulfing reversal day Friday, I like to look at this. I'm thinking 22.5, 3.5, and then 27.5, 8. How about this stock? And first started mentioning it a couple of weeks ago because it's just undeniable. One of the strongest charts in Wall Street. But it's a 1, 2, 3, 4, and the fifth wave's underway. Momentum could carry this, however, in the low 30s. VERV was a tech trader swing and a really good one, coming out of an inverse head and shoulders or left-handed extended V. It exploded, gave you a target in the high teens, I mean a buy in the high teens. It doubled to 37, pulled back right up to the 40s, 43 to be exact. Look at the last 2 months, it's kind of a falling wedge. Keep an eye on it, but don't let it drift, because anything under there, under say 30, could get this down in the mid-20s, so careful. I would think a move above, however, 34, 4.25 could trigger a move into the low 40s again. VRNA, another biotech with an explosive move and a 3-wave corrective, now forming some sort of bottoming pattern, I believe. Key resistance to watch, 1140. if you get through that 1140, you might see 13 and 15. VRT exploded and pulled back on Thursday, but followed through on Friday, has me impressed. This electronic components company, Vertiv, was upgraded, popped about 7%, and it's near its multiple month closing highs and resistance right through there. We get through that, likely to see a move to test 15 and then 18, 19. XPEV, I put a swing on it on a gut trade, had a nice day Friday. This is dangerous still until it breaks out. I really want to see a quick move to 8.25 and then targets a 9.5, 10 zone and much more potential. Zixi, the final stock on my long list, is a personal holding of mine. I'm getting impatient with it, but it hasn't broken support or resistance. It's still consolidating for 2.5 months and maintains its up channel. The target is 11.5, 12.25 range. Now test the box of shorts so we can complete today's stuff. And there aren't too many. I'm going to have to redo this list at some point. Many of them still negative. Take a look. Aligned right. Bounce Friday though. Ambarella, bear flag. Avient, which bounced and pulled back, maybe forming some sort of bottoming pattern, or maybe a bear wedge. So we shall see. But overall, avoiding anything short at this point until I see what the market does. I mean, when you see stocks that have gone from like 95 down to in the mid-teens, like CDNA did, it's hard to start to short it. But it's still momentum is to the downside, and this stock has not reversed yet. That's why it's still on my list. Now, Dollar Tree is disappointing because when it broke, I believe it was here, I put a short swing on it, and then it bounced and pulled back again, but it didn't break support, and then it bounced again. Now, Friday was too strong for me. It was up 458. My stop was over 146 because then you're vulnerable to a 154.5 test of the gap. Should it fail here, however, you can see the downside potential quite a bit, as low as 115. EL, ugly as it gets. Bear flag here after breaking down, another one there, but it was a 1, 2, 3, 4, 5, followed by a much better consolidation. So overall, a 1, 2, 3. Three may not be completed. You may see lower levels. Eventually, I'm not sure where to go with it, but it's long in the tooth to the downside. I'd be careful unless it rallies back to 225.28 and fails. FVRR continues to look ugly and just recently broke a multi-month consolidation that looked like a base, so that one's still vulnerable. Garmin, same thing. It's still in the down channel. Had a good day on volume on Friday, but it could be related to options expiration. I was basically telling you to short this one up here at 155, and it made it all the way down to 76 in half. Careful. HZNP, another drop down bear flag, large bear coil. Hasn't broken down or out, but it still maintains an ugly pattern per se. MED, it's just really weak. Came down from the bear flag and multiple waves down. Dropped from 333 down to 107. And it doesn't look very good, does it? Maybe if it pops this double top up here, 124.5, we can get a rally on it. But for me, you can just as easily take a bear flag and run to the downside. So careful on that. It wouldn't be long. Overstock continues to drift lower. Yeah, that was up Friday along with a lot of stocks. PNR, Pentair broke here, bear coil, bear wedge, bear flag, and hardly bouncing. Robert Half, beautiful. Tech Trader swing short. I gave it to you here in May at 99. It got crushed to 65, dropping. It dropped at one point. It dropped down as much as 11 points, but you see it rallied to 73, I believe. SITM, very ugly chart, continues bearish, but it is at support. Shutterstock, 1, 2, 3, 4, 5 waves down, but it doesn't look like a bottom, does it? It actually made a new 52-year low on Friday and looks like it has lower levels of potential. Trex, this flooring company, 1, 2, 3, 4, 5, at support, but in an ugly down channel, and very well might see lower levels. You can always cover above the double top 51.2 zone. TTEC continues to press the lows, and is down from 113 into the low 40s and doesn't look good. Upwork, really bad. Triple top in the mid 60s, dropped all the way down to 12. I don't see a bottom here. There is some support in the zone, however. Again, if you're short, stay short. If you're not a time to begin shorting that one. And finally, Zoom video. I mean, talk about hit. Nearly 600, 588 to 70 or 65 was the low. 70. Yeah, it might bounce, and if it does, you could see it up there, but this is a really nasty looking downtrend. That's a look at the longs, the shorts, all the technicals, the indices, and the NASDAQ 100 generals, et cetera, et cetera, et cetera. Please review this. It's going to be very important for you to know and be familiar with support, resistance, and targets. Have a great rest of your weekend. I look forward to working with you on Monday to make some money again. Take it easy, everybody. Bye-bye.